The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN, 8:30 a.m. Tuesday morning, 60 minutes to go until that opening bell, and we have a mixed market so far, a little bit in the red across the board. We have the S&Ps minus 5 points right now at 33.40. NASDAQ futures minus 38 points, 11,356. The Dow off about 40 points, trading 27,442. Crude, negative 30 cents right now at $40.28. We got the bonds. 10-year yield right now, 0.65% in terms of how those bonds are trading. A little bit of higher price and lower yield. The 10-year up about 2 ticks at 139.22. The 30-year up 8 ticks, 177.03. You back up the 10-year, you put it on a daily, and this is the exact area that it's loved to just kind of bounce around, 139.22, as rates are pegged with the Fed kind of coming in and providing liquidity across the board, about 0.2%, 0.65, etc. percent on that 10-year. Commodities, we got gold up a bit, up $7.80 at $18.90, putting it back on a 15-minute chart. We were down about $18.50 early in the day yesterday, so about $40 above those lows. Silver up 41 cents at $24.02. And what else we got jumping around? To some of the stories out there with stocks making moves. So it is still earnings season. IHS Markit, financial information and analytics provider, 77 cents a share for the latest quarter, 8 cents a share above estimates. INFO, I think we got McKesson. A little bit of volatility to the upside for IHS. McCormick, the spice maker. I was looking at this one yesterday. They didn't have weekly options in this. Not enough volume, probably. So they have the regular monthly option. So you would have had to go out into October if you were doing anything. The spice maker came in 1 cent a share ahead estimates. Quarterly earnings at $1.53. Revenue above projections. They saw strong growth in their consumer segment, although that was offset by lower demand in its restaurant and food service business, projecting 2020 adjusted earnings per share of $5.64 to $5.72. Market was looking for $5.76. And they're going to split MKC to see how that is hitting. Down to about 91. Talk about some volatility, though. What is that? $21 range from 205 to 184 with their earnings out this morning. We're sitting about $4 away from where that was yesterday at 195.18 to see some context, because I was looking at this yesterday. Quite the rebound, as in you were at about 166. You reached 112, then a rocket ship, almost doubling in price since then. And it looks like we're going to open up about 191 down this lower range on their earnings. Walmart is in advanced talks. They're going to invest $25 billion in India-based conglomerate Tata Group's super app, according to a report in the Mint newspaper. Set to launch in December or January, offer a wide range of products sold by Tata's consumer base, $25 billion. Walmart, jumping over to their shares. And we're going to be about flat. No real move on them. You know, it's putting this back on a daily. Walmart and Target. I mean, the run this had up probably a little bit ahead of itself. This on the Walmart Plus streaming service, which I think will be a big winner in the long run. Look at Target, though, comparatively. Target making all-time highs yesterday up to $157.71. That stock was up $90 at the lows. Speaking of lows, also stocks holding up so well. Lows, I mean, the high of $171.72, even with this market pulling back. Still near those highs. Home Depot in the same way as well, right near the consolidation basically taking place since the beginning of August or so. All right, what else we got going on? Checking over to the VIX before we get back to some equities, putting it on a 15-minute. I mean, something to keep track of, folks, is that this is quite a VIX for the start that we had to the week yesterday. Markets were up 1.5% across the board to almost 2%. You had the VIX at an elevated level of where you closed Friday. Really comfortable 2650. Even today, we're only off about 3 points in the S&P. You are again up 63 cents in the VIX as the price for insurance is going up as this market gets a little dicey maybe. Keep that in mind. Amazon launching a $4.99 per month personal shopping service for men, expansion of the Prime Wardrobe service. The new service could put pressure on rival styling service Stitch Fix. Let's see how Stitch Fix is trading on that news. Yeah, down a bit, no real reaction. Amazon shares trading flat in the pre-market. The NASDAQ was a little bit higher coming in. I'll pull this. I'll keep this on before I pull it off. This recent acceleration, I mean, the 382 retracement, 11,353. We're within about 7 NASDAQ 100 points of that price level. You jump over to the S&Ps, and it's a similar action. Sitting right at that 38% from the run lower from 35.87 to the lows we have of 31.98 about a week ago. All right, what else we got going on? Jumping around to the debate tonight. Should be interesting to see what happens. You could get, policy ideas from either candidate. You could get ideas from the president. You could get something from the president that he's planning on doing in his second term that the market could react to. Futures-wise, it begins at 9 o'clock tonight. Is not scheduled to include a discussion on Trump's tax position. I wonder how that's, I imagine that will be brought up in some fashion. But nonetheless, to 9 o'clock Eastern time tonight, that all kicks off. Okay, other companies with earnings, Big Lots. Discount retailer said it expects to report current quarter earnings of 50 to 70 cents a share compared to the estimate of 21 cents. Talk about some acceleration. Demand for home goods remains strong. Company's fiscal third quarter ends October 31st, so they're upgrading what they're talking about. But it's big. Yes, big is their symbol. That's the daily from $10, right? And we're going to open at about 51, it looks like. So we're going to be in this range here when we zoom it in. And there's their acceleration on an updated. That was the thing that was interesting about McCormick, thinking spices. The at-home market. I myself have bought more spices than usual. I imagine that's a trend that will continue in the long run, but of course losing out on all the businesses in terms of the restaurants and the corporate sales that you're dealing with there. Nonetheless, dealing with maybe you stock up on all of your herbs, and that's a tough demand to follow through on, right? As we pull back a bit, we're down to about 190 right now, coming off their numbers this morning. Microsoft's Office 365 and Azure Cloud Services, they had a disruption for several hours on Monday, impacting users such as Outlook email and Teams. Interesting. We have Microsoft 365, I believe it is, that includes Outlook, all your different Microsoft products, Word, PowerPoint, Excel. And I noticed nothing on myself yesterday, but Microsoft jumping around. 209.44, pretty flat from yesterday, and not a bad day yesterday in terms of opening lower, but trading back to about almost 209.44 for Microsoft. All right, checking into the markets as we await the open, jumping back. Pull this off. So you see where we were in the S&Ps, 33.63. We're about 20 points below that level. We were at that level at about 3 a.m. Eastern time. Lows made at about 33.35. We're currently sitting 33.42, minus about 3 points. Stay tuned, folks. Come back from the break, see what else we have happening for Tuesday trading. We'll be right back in 3 minutes.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The gold report is a comprehensive look at the metal sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the gold report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, everybody. We've got the S&P's -3, NASDAQ -32, Dow off about 12 points right now, jumping around to what else we have going on in the market. So Pelosi, Democrats unveiling a new $2.2 trillion coroner's to aid bill. We get some kind of bill in the tune of $2 trillion, $3 trillion passed through Congress. You could see quite an acceleration in this market. That's ahead of, we have the first debate taking place tonight. Presidential election coming down the pipeline. A lot of elections going on in terms of the Senate, of course, and the House as well. So how all those dynamics play into things with this negotiation taking place at the same time. But nonetheless, that's out there. You have the president that wants something, whether that gets through a Republican Senate, and the president and the Republican Senate and Democrats in the House can agree on something. But nonetheless, you're talking about a $2.2 trillion coronavirus aid bill, and we'll see how that plays out today as they plan to speaking in Tuesday morning in terms of Pelosi and Mnuchin speaking by phone Sunday and again Monday night. So you have the Speaker of the House, Secretary of the Treasury, they're talking. This is the bill getting put out, and quite an acceleration in the market yesterday. We're currently sitting, like I said, 20 points off the high, but still basically flat within a few points of where we were yesterday. All right, other stories out there. Where am I jumping around to? Yes, Bed Bath & Beyond. So Bed Bath & Beyond, a company that struggled greatly, they are teaming with Shipt and Instacart same-day delivery before holidays. As they get into the online delivery, the option will be available to customers in eligible zip codes at flat rate fee of $4.99 for orders of more than $39 at Bed Bath & Beyond and Bye Bye Baby. Not bad if that's where you can only find something, and maybe for the holidays they do have it, but it's tough when you are competing with the likes of Walmart and Amazon that usually are now coming into either same-day or next-day delivery for free. If you're talking about... And Bed Bath & Beyond had a nice day yesterday. It was up from about a close of $14.50 on Friday in a nice market, though. We were up at about $15.33. To put this in some context, we were down at $3. We're now trading about $15. You're almost back to pre-COVID levels. But for some real context, there's the acceleration. We're talking about you were just trading at $80. That is in January of 15, and a one-way down to, we were down at $10 as of December 18. Been bouncing around these levels. Maybe they pull their ship together, but they got a long road ahead of them, even offering those types of services, because what items, this is my first question, and during the holidays when you're fighting for everything you can get, gifts are selling out, especially the good ones. Maybe it makes sense. Maybe they're able to sell their inventory, but in the normal course of business, they're going to be hard-pressed to have items that are so exclusive that people are willing to go to that site and pay $5 to get it delivered, whereas you go to Amazon, you go to Walmart, you pay nothing to get it delivered. So that's the reason why I very much hesitate to consider the long-term business plan of that, but nonetheless they can deliver. I think Bed Bath & Beyond has earnings possibly this week as well coming up. All right, other stocks with moves in equity and action today. So finishing off some of the news in terms of specific equities, Polaris, they signed a 10-year deal with Zero Motorcycles. They're trading higher this morning to develop and sell electric off-road vehicles and motorcycles. The first vehicle is expected to debut by the end of 2021. Polaris, it's a nice pop from $92 to now about $94 to $95. Some context here. I mean, a real nice acceleration, as everybody figured out. Of course, people are going to be buying Polaris. They're going to hook up the equipment they have at home, the vehicles. You go off-roading, you do whatever you do, you build out your garage. Polaris trading at about 94 to 95 on that news. And Tiffany, so let's get into this one. Interesting as this saga continues. LVMH files countersuit against Tiffany and feud over the $16 billion deal. So the deal was LVMH, they were going to buy Tiffany. Now they've backed out on that deal. They said Tuesday they filed a countersuit in a bid to walk away from that $16.2 billion takeover. The suit filed Monday in Delaware says that they continue to have full confidence in its position. The conditions necessary to close the acquisition have not been met. Tiffany's been struggling dramatically after this was first announced. To jump over to those, there's Tiffany. Talk about some volatility as this deal goes through, falls apart. Still sitting at 116.70. We had recent lows of 108.11. But that is from sitting at 134.42, and it seemed all but assured this deal was going to get done before COVID hit. And LVMH, ADR. Yeah, quite a rebound from 60. We're basically at pre-COVID levels for LVMH. All right, what else we got going on? I'm going to jump around to some of the stocks that I take a look at personally. Disney shares, quite a nice pop yesterday, of course, with the market. We were down at 120. Disney, it's got a nice uptrend channel. That just got it back within that uptrend. You see where we are. At the lower end, quite a fall off from where we had. I mean, these earnings they came out with in the beginning of August. Remarkable. We're only almost 2 months ago. That's when they had 100 million subscribers combined. It's tough to imagine that you, over the course of 2 months, trade back to that level. But Disney is dealing with a lot of short-term woes. Investors probably very hesitant to get into that, knowing that it's a good year that you may have to endure, whether it's parks closed, movies pushed back in theaters, before we're really comfortable at 100% in those types of capacities. I can tell you, Florida, they're opening back up bars at 100%, and I find it tough to believe Disney could operate at 100%, operating in some capacity, but that's just tough in terms of the public being okay with that, filling it out. So they're in for some woes, but Disney back in that channel. We have Constellation with their earnings this week. Looks like we're going to trade a little bit higher at the open, 185.45, a nice pop in there. Coming back to their last earnings acceleration. You got a high volume bar on July 1st, that is, and so that low there, 182.04, and we're basically hanging out right in that bar of volume from their last earnings that came in pretty well. Jumping over to ride shares, Uber, they got the news out of London that they will have an 18-month license to operate there, traded higher, but gave back some of those losses. The way I look at it is you just got a nice, really talking about a consolidation, right? Right in, whoops. Well, right in this $30 to basically $38 price range, right? We're traded up there September 16th. We're right in the middle of that range right now. That would be the high where you have to get over. Then, of course, 41.86 from pre-COVID. And Lyft, a little bit of a different story, though. You see where we are in terms of $41 was the pre-COVID high for Uber. And you check out where we are, we're basically almost half of the price of where you were pre-COVID in Lyft. From $54.50, still sitting at $28. Yeah, we've been consolidating, but the early June high in Lyft, you're talking about $41.19, and we're trading at $28.05 right now. They did get a little bit of a pop yesterday on that Uber news as well. All right, checking back in on the markets. S&P's minus by 4 points right now. We got 40 minutes to go until the opening bell. Stay tuned, folks. We'll be right back.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as...
Whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that will take you step by step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
Bam!
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. We get the S&P is minus by 4 points right now. NASDAQ minus by 36. Dow off 22. Russell off 1 point. Jumping over to gold. Gold contract right now up about $5 at $18.87. Putting this on the chart of the entire, whether it was pre-COVID in March, we trade to a low of about $14.72. We're up to $2,089, trading at $18.87. And for you gold bugs out there, UBS is out there parading it as well. UBS says you should buy gold now. I wonder what their position is what I thought when I heard such a strong acceleration of what they're saying. We like gold because we think that gold's likely to actually hit about $2,000 per ounce by end of the year. The regional chief investment officer at UBS Global Wealth Management told CNBC gold prices have shot to a record highs this year, above $2,000 per ounce for the first time recently. So, as I mentioned, and gold has certain hedges to it. He said, in the event of uncertainty over U.S. elections, COVID-19, gold is a very, very good hedge, and its recent weakness represents a great entry point for investors. On the other news front, U.S. good trade deficit widens in August. So interesting. We get some Fed speak today. We have a debate tonight. We get non-farm payrolls on Friday. The election ever inching forward. The United States trade deficit in goods widened in August, with imports rising as businesses rebuild inventories that were depleted during the pandemic. The Commerce Department said Tuesday goods trade gap widened by 3.5% to $82.9 billion last month. So imports of goods rose 3.1% to $201 billion. That's how much we imported, eclipsing a 2.8% increase in goods exported to $118 billion. So I guess we're building up some of the depleted inventories that businesses have that have depleted during the pandemic. And we're building that up by importing some goods, not quite as building up the exports as quickly as a result. All right, folks, we got the S&Ps down about 5, checking in on the VIX one final time as we await that market open, 2684. S&Ps trading at 3341. Stay tuned, folks. We're going to have Larry Pesavento coming up live with Trade What You See next. We'll be right back.